Chad Slater now, the co-chief investment manager from Morphic Asset Management, who joins us at this time. Chad, good to see you. Now, there's another shock announcement, this time from UK PM Teresa May about the snap election in June. How has the pound reacted to that?
Thank you, Helen. Look, I think the pound has absolutely surged in the last 24 hours. They've put on almost 4 big figures against the US dollar last night. And what's quite remarkable from our perspective is if you look at it, it's almost pretty much confirmed a hard Brexit because now they're going to have a mandate to do whatever they like. Yet if you look at France, there's someone else vying for power who might want to leave Europe, and that's deemed to be a bad thing. So it says a little bit about how markets value certainty.
Yeah, so it's interesting. I mean, so you don't doubt in any shape or form that she will win?
I think if you look at the polls and look where the Labor Party is in the UK, and I lived in the UK for a number of years, and all our friends give us similar feedback, is the UK Labor Party is on its knees there.
Yeah, I mean, is it the end of Corbyn, do you reckon?
Who knows? That man is remarkable in his survivability. In some respects, the Labor Party has been taken over by the hard left there, and as a result, the way that they've re-implemented their voting internally is that they've tried to remove them a number of times, and it's been impossible. So, unfortunately, it might even be the death of a party for the first time in a number of years, which would be quite sad. But yes, I can't see any other outcome at the moment apart from quite a large sweep to power. The only thing that would be of interest is the Lib Dems. They're what you might call a more centrist party. They're probably the most pro-European party there. So, whilst we're only 24 hours into this, a number of people are talking about, well, there was a UKIP party, which is the Independence Party, that helped lead the UK out of Europe. Is there going to be a movement towards like a pro-EU? Could there be a protest vote to be part of Europe here?
Yeah, you mean all those people who should have voted in Brexit and didn't, might they try and get their revenge? But I mean, she has now committed Britain to this, and there wouldn't appear to be any easy way of turning that back.
Look, I don't think so. It would be so much stopping Brexit. I think I have to agree with you, Helen. And I think the populace said they wanted out. It's there's one thing to say you want to leave a party. There's another manner in which you leave it. And I think the markets might react more favourably to the idea, or either idea, which says something about positioning, that they come to a better customs arrangement, etc., like as a solution. So I think what the market's really hoping for is just some certainty here.
Yeah, well, it is interesting you say that, you know, the fact that a decisive leader is wanting to exit Europe in a hard way, that becomes more certain and is so much more positive for local markets. Just take us through that thinking a bit.
Yeah, it's one of the things that we looked at in the office yesterday afternoon or this morning is that Le Pen is obviously the biggest talking point at the moment in her potential election in France. And the idea that she is a hard leader that wants to take them out of Europe, and that results in uncertainty. And I think what the difference is markets don't mind risk. What they hate is uncertainty.
What? So there is a difference?
Oh, there's a very big difference. Risk is
of course there is. Yeah, right. So, but you're sort of taking a punt. You're happy to do that if you've weighed up options.
Yep.
But uncertainty means you don't have the options, I guess.
Or you don't. So the easiest way to think of the difference is if you have a dice and you're told you have a 1 in 6 chance of winning, you should probably, unless those odds are vastly different, you should take it. If someone says, I have a dice in a box, I'm not going to tell you how many sides it is. That's uncertainty.
All right, let's move on because it really will be interesting. She really kind of stole a march there. And of course, in a funny way, before we move on, in a funny way, it does take the focus really just off France and nervousness there.
Yeah, the markets, we've only got a few days left now.
Well, only to the first round.
To the first round, true. But we're looking at some indicators. What you've got this interesting dichotomy here is that if you look at equity market flows, a lot of money in the last quarter has actually come into Europe, and we've got some sympathy for that view. European stocks are quite cheap, some in France in particular. My colleague spoke about Alstom on here, James Taylor, the other week. But if you look at the bond market, bond spreads just keep getting larger and larger. So bond investors have become increasingly concerned with the outlook. but equity market investors are have a little bit more benign view.
Yeah.
So there is this, we're keeping an eye on things there. Our house base case, for what it's worth, is that she ultimately still doesn't win, and that European markets rally from here. But we are cognizant that some of the players aren't taking this as their base case.
Chad, I want to talk to you about the Fed in the United States. Now, given what the market price is sort of saying, does it mean the Fed has given up on hiking? Or perhaps the market thinks they've given up on Trumponomics and him delivering?
Yeah, it's a very good point, Helen. The remarkable thing was the Fed surprised everyone, us included, by actually pushing for a March hike. Most people in the market, as I said, us included, thought they'd probably go by June and then maybe another one or two after that into year end. So they pushed ahead and went with March, which normally would imply that they really want to get their things moving on, so that they want at least 3 hikes this year. So we've gone from that happening barely 6 or 8 weeks ago to now the market only pricing 1 more hike. So how do you interpret it? Well, one way of looking at it is they've given up on Trump. The idea that Trump was going to result in a growth pulse, that you could see better GDP and therefore the Fed has to go more times. People seem to be throwing the towel in on that at the moment.
But he's talking about still a big announcement on, infrastructure and roads and rail.
I think what the market's feeling is we're now 4 months in. Healthcare, to quote him, was going to be his big reform, the thing they did first. Turned out they didn't do anything. Tax reform is probably going to take at least 1 to 2 years now.
Yep.
The Republicans and the donors cannot even agree amongst themselves what they want. So the market's sort of, well, once bitten, twice shy there. We're going to bet that he's actually going to get something done in the next 6 months.
All right, and just briefly, where do you like in terms of investment?
Look, Helen, we touched just before, basically it's everything other than the US. We think the US at the moment may have some great GDP data, but at the end of the day, the Fed is going to be raising rates there in the US this year. If I look anywhere else around the world, good GDP is actually going to lead to better EPS. So I mentioned Europe. We like Europe quite a bit, and we talked about Alstom. We also like emerging markets. We think the US dollar strength has passed for the moment, and so we think emerging markets could do quite well out of GDP and earnings. So they're the 2 areas, anything but the US.
All right, Chad Slater from Morphic Asset Management, good to talk to you. Thank you.
Cheers, thanks, Helen.